In 2025, the United States rolled out a sweeping change to its visa policy. Now, many travelers must post a $15,000 refundable bond just to apply for a tourist or business visa. This hefty financial requirement has shocked the global travel community. It creates a significant barrier, especially for middle and low-income visitors. Tourism-dependent businesses across the country are already seeing declines. Airlines are cutting back flights, and popular destinations report fewer bookings. This policy is part of the broader Trump Tariffs 2025 framework. Understanding how this bond works and its wide-reaching effects is essential. This video will break down the mechanics, impacts, and controversies surrounding the visa bond. Whether you're a traveler, business owner, or policymaker, this issue affects you. Join us as we explore how one policy could reshape American tourism and economy. The future of international travel to the U.S. is at a critical crossroads. Let's dive in and uncover the full story behind the $15,000 visa bond shockwave. Mechanics of the $15,000 visa bond, how it works, and who it affects. The $15,000 visa bond is a refundable financial deposit required from applicants seeking B-1 business and B-2 tourism visas to the United States. This bond aims to ensure that visitors return to their home countries after their stay and reduce visa overstays. The amount of the bond varies depending on several factors. These include the applicant's country of origin, travel history, education level, and perceived risk of overstaying. Consular officers have broad discretion to determine who must pay the bond and the exact amount required. This discretion has raised concerns about fairness and transparency. Applicants from countries with higher rates of visa overstays often face larger bond demands. The process begins when applicants are notified to pay the bond as part of their visa application. After payment, the bond is held until the traveler completes their trip without violation. Refunds can take months to process, causing uncertainty and financial strain. Many applicants fear losing their deposit due to bureaucratic delays or unclear refund policies. Advocacy groups argue that the bond functions more as a financial barrier than a genuine security measure. Critics also highlight ethical concerns, saying it disproportionately targets travelers from less wealthy nations. Understanding these complexities is key to grasping the controversy surrounding the visa bond policy. Immediate effects: travel decline and flight cuts. Since the introduction of the $15,000 visa bond, international travel to the United States has dropped sharply. Data from 2025 reveals a 14% decline in foreign visitors compared to the previous year. This decrease has resulted in an estimated $12.5 billion loss in travel-related revenue nationwide. Major airlines like Air Canada and LATAM have responded by reducing or canceling flights to key U.S. cities. Flight cuts have particularly impacted popular tourist destinations such as Miami, New York City, and Orlando. These cities rely heavily on international visitors for their local economies. As a result, hotels, restaurants, and entertainment venues are experiencing significant downturns. Travelers are increasingly redirecting their trips to countries with more traveler-friendly visa policies. European nations like Spain, France, and Italy have seen tourism booms as a consequence. Similarly, destinations in Asia, such as Thailand, Japan, and Singapore, are benefiting from easier entry rules. This shift poses a serious threat to the U.S.'s status as a top global travel destination. Understanding these immediate effects highlights the broader economic and social challenges the visa bond policy creates. Deep economic impact: businesses, workers, and communities. The $15,000 visa bond policy has triggered serious economic challenges across many sectors in the United States. Tourism-dependent industries like hotels, restaurants, and local services are feeling the strain. Cities such as Orlando, Miami, and New York have reported sharp declines in visitor numbers. As a result, many businesses have had to cut staff or reduce operating hours to stay afloat. Small businesses, including local tour operators and souvenir shops, face shrinking customer bases. Beyond tourism, the labor market is also under pressure due to tightened immigration policies. Farms in states like Texas and Georgia are experiencing worker shortages. Many rely on migrant laborers for planting, harvesting, and processing crops. Without enough seasonal workers, agricultural yields and revenues suffer. The healthcare sector is similarly affected, especially in rural areas. Foreign-trained nurses and medical professionals are arriving in fewer numbers. This exacerbates staffing shortages and impacts patient care quality. Declining tourism also reduces tax revenue for local governments. Lower tax income hampers public services and delays infrastructure projects. Communities that once supported stricter immigration measures are now facing unintended economic hardships. Real-life stories from affected workers and business owners highlight the deep human cost behind these policies. Understanding these impacts is essential to grasp the full scope of the visa bond crisis. The dual-track immigration system: privilege versus barrier. The current U.S. immigration landscape reveals a stark divide between wealthy investors and ordinary travelers. While many tourists face the hefty $15,000 visa bond, affluent investors benefit from special privileges. The government's Gold Card program fast-tracks wealthy investors, granting them easier entry and tax incentives. This creates a two-tiered system that favors money over merit or genuine travel intent. Ordinary travelers, especially from less affluent countries, bear the brunt of financial and bureaucratic hurdles. Critics argue this deepens social inequalities both within the U.S. and internationally. This disparity raises ethical concerns about fairness and access to the American dream. Social groups and immigration experts have voiced strong objections to this unequal treatment. International communities see it as a sign of discrimination against lower-income travelers. The dual-track system fuels resentment and damages the U.S.'s global image. Understanding this division is key to grasping the broader social and political implications of the visa bond policy. This contrast highlights the challenges the U.S. faces in balancing security, fairness, and economic interests. International diplomatic response and soft power loss. The introduction of the $15,000 visa bond policy in 2025 has sparked significant diplomatic backlash from several regions, including Africa, Latin America, and Asia. Numerous governments have formally protested the policy, accusing the United States of discriminatory practices that unfairly target their citizens. These diplomatic tensions threaten to strain important trade relationships and undermine long-standing international cooperation. Some countries have even issued warnings about potential retaliatory measures, which could escalate into broader political conflicts. Beyond economic and diplomatic repercussions, the policy has seriously eroded America's soft power, its ability to influence other nations through cultural attraction and diplomacy rather than force. The sharp decline in international visitors has reduced cultural exchanges, educational programs, and tourism-based goodwill that are critical to maintaining global relationships. This weakening of soft power diminishes the United States' role as a global leader and trusted partner on the world stage. Experts warn that continued diplomatic friction may weaken key alliances, making it harder for the U.S. to negotiate trade deals and address global challenges. Moreover, the policy's fallout extends beyond immediate diplomatic circles, affecting the perception of the U.S. among ordinary citizens worldwide. As global tensions rise, the risk of diplomatic isolation increases, potentially limiting America's influence in international affairs. Understanding these broad consequences is essential to fully grasping the impact of the visa bond policy and why it remains a contentious issue internationally. Moving forward, it will be crucial for U.S. policymakers to balance national security concerns with the need to maintain strong diplomatic and cultural ties. Global Visa Policy Comparisons, USVS competitors. When comparing the United States visa policies with other major global destinations, clear differences emerge that affect traveler choices. European countries like Spain, France, and Italy offer relatively streamlined visa processes. These nations provide tourist visas with lower fees, simpler documentation, and predictable approval times. Applicants often benefit from transparent guidelines and faster processing, sometimes within a few weeks. The welcoming policies contribute to Europe's strong tourism growth, attracting millions annually. In Southeast Asia, countries such as Thailand, Vietnam, and Singapore have adopted traveler-friendly visa regimes. Many offer visa on arrival or e-visa options, significantly reducing the hassle for visitors. Processing fees are generally lower than in the U.S., and application procedures are more straightforward. Japan also stands out with its efficient visa system, combining swift processing with clear requirements. Travelers praise Japan for a smooth user experience and reliable customer service. In contrast, the U.S. requires a $15,000 refundable visa bond for many visitors, coupled with complex application steps. This policy introduces substantial financial and administrative burdens. The average wait time for visa approval in the U.S. often extends several months. This lengthy process discourages tourists and business travelers alike. The high costs and uncertainties push many to choose destinations with simpler entry requirements. Consequently, countries with friendlier visa policies have seen faster tourism growth. They attract travelers who prioritize convenience and affordability. The competitive disadvantage caused by the U.S. visa bond risks long-term losses in international tourism market share. Understanding these contrasts highlights the urgent need for visa reform to keep America competitive. If the U.S. wants to maintain its status as a top travel destination, it must reconsider its restrictive policies. Future outlook. What if the policy remains? If the $15,000 visa bond policy continues without change, the future of U.S. tourism looks bleak. Visitor numbers are expected to keep declining, further shrinking revenue for hotels, restaurants, and local businesses. This sustained drop will hurt not only major cities, but also smaller communities reliant on tourism income. Industries that depend on international travelers, like airlines and transportation, will face ongoing challenges. The ripple effect extends to the workforce as well. Job losses in hospitality, agriculture, and healthcare may increase due to fewer available foreign workers. This labor shortage can slow economic growth and strain public services. Moreover, the U.S. risks losing valuable market share in the global travel industry. Competitor countries with friendlier visa policies will continue to attract tourists and investors. Long-term neglect of visa reform could see the U.S. fall behind in international tourism rankings. This shift would have broader economic implications, including reduced tax revenue and diminished global influence. Local communities may experience increased economic hardship and social disruption. If left unaddressed, these trends could deepen economic inequalities and widen regional disparities. For the U.S. to reclaim its position as a leading travel destination, urgent policy changes are necessary. Balancing national security concerns with open and accessible visa processes will be key to reversing these trends. The stakes are high, and the time to act is now to protect America's tourism future. Proposed solutions, policy reforms and strategies. Addressing the challenges created by the $15,000 visa bond requires urgent and comprehensive reforms. First and foremost, reducing or entirely eliminating the costly financial bond would remove a significant barrier for many travelers. Such a change would help restore confidence and encourage more international visitors to choose the United States as their destination. Secondly, increasing transparency and simplifying the visa application process are essential steps. Clearer guidelines, more straightforward requirements, and faster processing times would greatly reduce confusion and administrative burdens for applicants. Making the system more user-friendly can improve overall traveler satisfaction and trust. Third, significant investments in tourism infrastructure and international marketing campaigns are crucial. Upgrading airports, improving transportation networks, and expanding accommodation options would enhance the visitor experience significantly. Targeted global marketing efforts can rebuild the United States image as a welcoming and attractive destination. Moreover, policymakers must carefully balance national security concerns with the need to foster economic growth. While security remains a top priority, overly restrictive policies risk damaging the economy they intend to protect. Collaboration among government agencies, private industry leaders, and international partners will be key to designing smarter immigration and travel policies. Such a balanced approach can safeguard borders while promoting a thriving tourism industry. By adopting these reforms, the United States can regain its competitive edge in the global travel market. Timely action is essential to prevent further economic decline and secure a prosperous future for American tourism. The stakes are high, but with thoughtful and decisive policy changes, U.S. tourism can thrive once again and continue contributing significantly to the economy. The $15,000 visa bond and Trump Tariffs 2025 have dramatically reshaped U.S. travel and economic landscapes, creating significant challenges. Their impact goes far beyond visa applications, deeply affecting businesses, workers, communities, and international relations alike. Urgent reform is essential to revive America's tourism industry and restore its global reputation as a welcoming destination. If you found this video valuable and informative, please like, subscribe, and share it with your friends and family. We encourage you to join the conversation by sharing your thoughts and opinions in the comments below. How do you believe this policy will evolve in the coming years, and what changes would you like to see? Your engagement helps us deliver better content and keeps these important discussions alive and thriving. Thank you for watching and staying informed on this critical and timely topic.